Yo, what's up, guys? Welcome back to another recap video with your boy Steve-O. It is August 28th, 2022 on a Sunday. And today I'm going to be going over some trades from this month that all kind of have the same setup slash strategy. And that strategy is shorting into pre-market highs for a failed follow through. So yeah, let's get into it. Sopa. Here's my trade on Sopa. I traded Sopa August 4th. And as you can see, my pre-market was my pre-market plan that I posted on my Discord was to short into pre-market highs 275 with wiggle room into threes, then waited for a breakdown back under pre-market highs to add the rest, and then I was going to start looking to cover into 250s down into 230s for a retest into the 15-minute trend. Okay, so this one you can see here, 275, 290s. I was gonna add maybe like at 310 if it got there, but once it failed to get there and broke back under pre-market high, there's that failed follow-through move. Add the rest before it breaks this bigger time frame trend. Wait for 250s to start covering, flushes into 240s, 235, but then it kind of held at 235, which was near the 15-minute trend. So I ended up taking most of it off in that same zone. So yeah, that was Sopa. I think this day kind of ended up reclaiming high a day, but later on in the day, so that's why you gotta avoid these when they stay trending on the 15-minute. The next one that I traded similar to that is and you see I got all these other ones here, but those will probably be explained in other videos as they are different setups. Shout out to the homie Gage. He longs stocks. CLWT. This one I traded on August 10th. This one is a good example of what I could have done better, or yeah, so basically it had this flag forming, giant flag during pre-market. I was looking to long it near this 2 to 220 area for a potential move over 230s to 250s. I ended up longing it off that 220 bounce here right out the open, and bounced off the 5-minute trend. I should have just sold it all here, knowing that if it fails to hold pre-market high, which was 240, I could have flipped short sooner instead of adding more into my long. And then I basically just stopped out here the rest of my long position, seeing that it failed to reclaim 240s. So I ended up flipping short. I went short here in the 225 area, and then started covering into the 215s, 210s, 205s. So see, this trade right here could have been better, because if I would have just been short the entire time from 240s to 260s, added some in the 250s, maybe even more here in the 235s, I would have had a decent average, and then scale down into 220s, 210s, and then low 2s for a pre-market high breakout fake out move. or pop short the pop over pre-market high or gap up short kind of thing. So yeah, that was CLWT. So this one I kind of messed it up, as you can see, going long and then selling it and then adding more, stopping out, flipping short, taking the easy backside move here instead, which I should have just done at the beginning, but it is what it is. But that was CLWT. Another similar one, Veru. So Veru, my plan was to scale into the move over pre-market highs again, then watch it react around 1740. Once 18 rejected, that looked like the final squeeze out, so I added the rest of my size here. Then I just waited for the break back under 1650, 1550 to get out. This one was tougher only because it also halted. So this thing, so you see my entries when I scale into this kind of move over pre-market high. I tend to have them spread out enough to where I don't get squeezed and I can't control those emotions. So I have to break out my entries into proper scale out zones, if that makes sense. So here I can see I scaled in at 1480s, 1550s. So I was giving myself about 50 cent range. So then after 1650s, I scaled into 1614. So it's about 60 cent range. Then the stock halted. Here I was only in 30% size, so I wasn't really scared at this point yet. If anything, I was like, okay, that's good. If it halted up, that means we're near the top now, because now shorts are getting blown out or shaken out because they're probably in too heavy. So I scaled more into that 16 areas, seeing that I was possibly looking to cover into this 1450 area if it failed here, and then more into that halt level up above 1680s. And then at this point I kind of just waited for that final squeeze over 1750, and then once it squoze over that 1780s, I believe, and then it failed to hit 18, I basically just slammed the rest, seeing that it came back under that previous top highs, and then I just waited. And then this one, I remember I was looking at the 15-minute trend. So the 15-minute trend had caught up, and it was around $15 at this point after it ran all the way to 18. So I figured my average was somewhere around here in the 1680 area. So by the time it broke down and got under 16, I'd be able to start scaling out, because now it's the backside. Shorts are blown out, shorts are exhausted, longs are done selling if they bought into that 1480 breakout, and then now it's basically just starting to fade. You got volume dying down, so then that's kind of where that's why I was using this area to scale out. So in a way, it's kind of, I took a loss on this one only, because then this one I have some orders below that, and then all these orders below that, and then all these orders below that. So that's kind of how I manage my risk, by scaling my way up and letting it exhaust people, but also having the proper scale in entries, or making sure that they're separated from each other so that you won't get totally squeezed, you know. Like these $14-15 ones, you can't be scaling in every 10 cents because a dollar move is like 2-3% move, so you got to give it like 10% wiggle room to scale in, you know. So that's kind of how I approach these, because eventually, once they're done exhausting, they're gonna just pull the bid, and then it's gonna go back under pre-market high or near pre-market high, depending on how far up it squeezes. In this case, it went 1480. Let's do the math on it real quick. 1480 plus 148, 1630. So 1630 was 10% over pre-market high. And then 1770s. So 1770 was 20% above pre-market high. So then if your average is near 15-20% above pre-market high, most likely you'll be able to catch a decent 10-20% retracement back into that breakout level or trend, aka I use the 15-minute. Lately I've been using the 15-minute. Here's another one. My plan was to watch for a retest into 260s, which was near that previous top. 280s, 3s for potential retracement back into the 15-minute trend near 255, 265. I began to scale into 250s with smaller size 5% bullets because I kept in mind that they can easily reclaim back over highs. Once it got over 280, I began to use 10% bullets. So it goes back to my scaling. I scale in small to get involved, to get a feel for what the stock is going to do. And then as it gets higher and higher, I'll start to add bigger sized bullets so it can bring up my average, but also managing my risk that way and not adding big size to where I feel uncomfortable. Once I got over 280, I began to use 10% bullets, therefore bringing my average up as it got extended, then consolidated between or above 280. And I was thinking once it breaks below 280, it'll retrace or mean revert back into the trend, and then that's where I'll cover. So you see here, this is probably around 20% of my size, 25%. And then right here, I started probably using 10%, so 35, 45, 55, and then 65. So, now we're near the top. 265 to 285 gives you 10%, 315. So let's see what the math is on that. 265 plus, so 291s gives you 10%. 317 is 20%. The stock topped out at 315. So that's like 2 cents away from 20% over that pre-market high. And then I just wait. You see 3 becomes resistance. Trade sideways. This top wick here stops out shorts that are too heavy. Then they pull the bid. You get that flush. And then 270s, I just start covering, because at this point my average is probably somewhere up here. So by the time it breaks down, I'm already in the money. And then near this 15-minute trend here, 255, 260s, as I was saying, that 15-minute trend was a good spot to just take your profits. So yeah, that was ear, another pretty much similar example. Let's see, what's another one? Bop boop bop boop. I'll probably show you guys some of these other trades in a different video, so stay tuned for those. You got drug's probably the last one that is similar to that pre-market high setup. So let's just go over drug, and then I think I'll wrap this one up. So drug, this one I traded this Friday. I was thinking I wanted to see a move over 350s into 380s and then 415. So that was my original plan, but then pre-market it started squeezing, and then 372 became the new pre-market high. So then I used that to start scaling in, and then as we got over 390s, we squeezed all the way up to 4. So once we got up to 4, I just started kind of hammering it there, because I saw that was the big volume bar right there. So that was probably like a squeeze out for shorts. And then I just kept adding into this $4 area, because I was seeing that the 15-minute trend was near 330s. So I figured if I'm scaling in at 4 and the 15-minute trend is at 330, I'm gonna have a pretty decent retracement move back to the downside. So once we got this first lower low, I scaled into that pop into the 390s, and then we got our second lower low. I added the rest of my size, seeing that we had room to go down to 350s, 330s, 320s. Then you see how once it made that new lower low, 2 lower lows, it kind of traps and squeezes over that previous lower high. But then you see that wick, it like stuffs, and then 390 becomes resistance again, and then there's the big pool, breaks, then that's your third lower low. The third lower low breaks, huge flush. I just began to cover into 365s, and then 340s, 345. Saw this bounce. I figured I was safe to add or recycle more into this bounce here into 360s, because my average was still near 390s. And then basically on that flush started covering back under 350s, 340s, and then I took the majority of it here off at 330s only because 15-minute trend. So yeah, that was the 15-minute trend. Oh yeah, let me show you guys. I like this chart, so you guys can see 15-minute trend as I was referring to. I'm just looking for that extension over that 15-minute trend here. At this point, we're almost like 15% above the 15-minute trend, and then you get these top wicks here, so that's kind of like confirmation that it's starting to look weak, and we might get a move into that trend. So then see that trend mean reverts, and then that's where I take most of my profits. So it's a good way to gauge your exits without having to overthink it. But yeah, guys, that's pretty much all my pre-market high shorts from August. Pretty decent action lately, so hopefully this continues into September. If you guys have any questions, hit me up in my comments or my Discord. I'll post a link in the description below in case you guys want to join that. It's free. I post all my plans there, pre-market, so you'll get, a plan of what I'm gonna trade before the market opens, and just like some talk before the market opens to kind of give an idea of what I'm looking at, how I'm feeling, market environment, all that good stuff. So So yeah, sign up. It's free. Like the video, subscribe to the channel if you haven't already, and we'll see you guys on the next one. Peace.